Another big quarter of apartment demand in Dallas-Fort Worth, and now the more affordable submarkets are filling up and the higher rent areas are posting some big rent hikes. But should we be worried about single-family home sales and new supply? Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Dallas-Fort Worth update. In each of the past 3 years, second quarter has brought big demand to Dallas-Fort Worth, and that continued in 2012 second quarter, with absorption reaching 8,031 units, roughly in line with what we saw in Q2 of 2011, thanks to some consistently strong job growth. Much of that demand is helping backfill vacancies in lower tier product, the bottom half of the market, which has been dragging behind for some time now, while the top half has been filled up. So with that, occupancy is now above 94% for the first time since the end of 2007, 94.1%, up 100 basis points in Q2 and 140 basis points year over year, and that is the 8th straight quarter with annual occupancy growth of more than 100 basis points. So I mentioned earlier that apartment demand has shifted to the bottom end of the market. 10 submarkets posted year-over-year occupancy growth of 200 basis points or more. And for the most part, these are more affordable submarkets. Carrollton is the oddball on this list, and that one is here just because of some new supply that's gone through lease up and brought occupancy back up. But these other spots are generally some working class areas: Far East Dallas, Northwest Dallas, South Dallas County, Northeast Dallas, Southwest Fort Worth, Irving, Hurst Euless Bedford, Grand Prairie, and Mesquite. And with occupancy now in pretty solid shape, essentially across the board, or almost so, rents are increasing at unusually high levels by DFW standards. Year-over-year rent hikes around 4.5% in each of the past 3 quarters and 4.3% specifically in Q2. And we should note here, there's a big gap, unusually big gap, when looking at the difference between Dallas and Fort Worth. Dallas ranked among the top 5 markets in the South region of the country, with rents up 4.8% annually. But Fort Worth way behind. Over there, rents were up just 2.7% annually, and that traces to some really weak rent hikes in some of Fort Worth's working class suburbs. So 13 submarkets posted year-over-year rent hikes of 5% or more, and most of these are higher-end submarkets in the Dallas side of the Metroplex, where occupancy is already very tight. Here are your leaders. East Dallas, huge hike, 16.4% year-over-year. Oaklawn Park Cities at 8.1%, followed by Grapevine, Rockwall, In-Town Dallas, and Frisco. So lots of very good numbers there. But a couple of threats moving forward, the things that people are talking a lot about now, is single-family home sales and new apartment construction. Now, let's talk first about single-family. We are seeing a significant increase in single-family sales volumes. Year-to-date, they're up about 15% relative to what was saw through the first 5 months of 2011. But you got to bear in mind that we're coming from a low point in the cycle. When we go back to 2007 and compare that to the first 5 months of 2012, we're still down about 20 to 25% across DFW in terms of total number of homes sold. So right now, that total job growth that we're seeing is enough to feed demand for both single family and for apartments. And given that the increase we've seen in lending requirements for single-family home purchase and also low inventories, a lot of people not willing to sell their homes yet until prices climb even further, it's likely that we'll see sales recover at a fairly moderate pace. And construction, let's take a look at some numbers here. DFW is on the verge of seeing new supply levels return to 5-digit territory. The bottom here wasn't very low at all, 5,000 units completing annually. It's still a ton compared to what we're seeing elsewhere. Next year, we're going to expect to see just over 10,000 apartment units complete. Now that's a big number, but it's just 3/4 of the annual average for DFW over the past 15 years. And so not a very significant number by DFW standards. And this construction is pretty spread out across DFW. And given that job growth has been pretty strong, we think that the supply number won't significantly hamper occupancy and rent growth. Now, later in 2013 and then going in 2014, as supply ramps up and single-family home sales accelerate further, then we could see revenue growth levels start to come down a good bit. But until then, for the year ahead, we're projecting further revenue growth for DFW. Look for occupancy to climb 80 basis points to 94.9%, and for rents to climb another 4.1%. And that wraps up for DFW. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.